Hello folks, what is up? In this podcast I want to go through and see what happens after you had a car accident. Having the best car insurance. As mentioned in one of our previous posts, we have gotten into a car accident this past weekend and have thankfully survived unharmed. Because we have the best car insurance, we had nothing to worry about. Or so we thought. After we contacted our insurance company, we were assigned an insurance agent together with a case number. Our insurance company contacted us early Monday morning since the accident happened on a weekend. In this initial phone interview, we went through the accident again with the insurance company this time. It took another day for the claim professional to get in contact with us and to declare that the car is considered a total loss. The email that followed had 3 attachments in PDF format. The estimate. The first was a copy of the estimate, which declared the car a total loss claim. The appraiser of our insurance company created this estimate, which listed the expected replacement costs for repairs. Notably, the cost to replace the airbags alone was in excess of $4,700. The bodywork was only quoted with around $1,200 for parts. The labor cost was not estimated at this point. Market Valuation Report. In our case, the Market Valuation Report was done by CCC 1, which interestingly has gotten into trouble earlier this year in Massachusetts for lowballing offers according to an article I found online. Here's a snippet from this article. The Massachusetts Division of Insurance has agreed to investigate an allegation that faulty car appraisals by a widely used firm routinely cost drivers hundreds or even thousands of dollars in claims on totaled or stolen vehicles. And a complaint filed in August by Source One Financial Corp., a Norwell auto lender, alleges that CCC Appraisals has often understated car values through sloppiness or fraud, resulting in lowball payouts by insurers. Going over the market valuation report, I could see that the interior was a mess and the leather receipts were below standard, which quite honestly is true. That is the nature of having a car during the toddler and early childhood years of your kids. I found some interesting numbers with regards to the condition adjustments, however, where the overall adjustments was plus $33. This is mostly due to a set of 4 completely new tires. But then, at the final adjustment, the condition for the comparables was set at negative $820. To the untrained eye, this surely looks like a fudge number to adjust the value down. Of course, I asked the claim professional from our insurance company about it. Here's what he told me. The condition adjustment makes the adjustment for the difference between what the dealer's asking price is and actual sale price for a private owner sale. Most folks do not pay sticker price for the vehicle purchase. The actual sale price is usually negotiated. So yes, the insurance company is using a fudge number between negative 15 to 20% to decrease your price. After a lot of back and forth to explain this number better, the answer was revised to mean that the cars being sold have in general above average condition of the individual components like tires, carpet, etc. So the calculation goes that in order to get the ready to buy car, you deduct the above average condition of the individual components down to average condition. And again, this number does not make any sense. To replace a car, you have to buy a car. If you buy a car, you likely get to choose between what's available. To split out the condition of the car on sale is to ignore the fact that you can't ask to get the car with average condition parts. And even if it were in average condition, the insurance company would still deduct the pro forma $820, aka fudge number. Also, with older cars, you will often find them in average or less than average condition, like the tires or carpets have wear. Next on my list of things I did find odd was that the comparable value of 12-year-old minivans came down to $3,240. The total valuation for the car, however, came in at only $2,431. That is yet another $810 less than with the comparable. I also asked about this, and it was a simple matter of adding all the 12 comparables values together instead of the 3 main ones listed. Your deductible and claim payment calculation. And here's how insurance companies calculate your payment. First, we calculate the value of your loss. Next, we subtract your deductible. Last, we will issue your payment. Following this order, you can clearly see what's last for the insurance company. And as businesses go, this may be what makes sense for them because they can. It leaves a bitter taste if your own insurance company takes all the chips off the table. Good businesses is meant to be beneficial for both parties. Kind of like having a big brother looking out for you when things go haywire. The power of attorney. That was a third attachment to the initial email we received. The power of attorney is required so that our insurance company can take over ownership of the vehicle. You are basically handing your property over to the insurance company without legally selling it to them. They can use this power to do what is needed with the car. In most cases, the first thing the insurance company will do is to send someone to the parking lot where the car was towed and move it to one of their own lots. The towing company fees of having your damaged car rest on their property can be quite steep. In our case, it was above $100 per day. The power of attorney will allow the insurance company to actually move the car off the lot. Long time since. It has now been 2 weeks since the accident. We were told by our insurance company that our car rental benefit will run out after 2 weeks. This was different than the initial mentioned 30 days. You have to make sure to ask if there's a difference for this benefit if your car is being repaired or if your car was totaled. While your car is repaired, you may have the rental car longer than to find a replacement car. We have not yet received the reimbursement from the insurance company yet, so we had to make a decision if we want to buy a new car now. Otherwise, we would have to hold on to the rental for a bit longer. All in all, we looked at 5 different cars. We really liked 2 of them and will most likely buy one of them by the end of this week. Update. Yes, we finally replaced our family minivan, and no, we have not yet been reimbursed. Handling the financial burden. Going to a car dealer and buying a car can be a daunting task. Not only do you have to decide on the vehicle you want to buy, you have to also decide how to pay for it. You can either finance the deal through a third-party lender, your bank, or in some cases through the car dealership itself. There's no right or wrong way to get about doing this. In our case, we used our bank to apply for a home equity line of credit to pay for the car. This way we received a very favorable 4% interest rate on the loan rather than the 4.7% offered otherwise as car loans. You can find a good comparison tool on my blog. We wanted to pay down the car within 3 years and used a loan calculator to find that we had to pay at least $590 per month to get to our goal. Looking at the best car insurance. After this experience, I am ready to move on. I have started to contact 5 different insurance companies for quotes. Although I'm in no hurry, I will look around for better things. It may be that this is the way that all insurance companies work, or it may be that we will find one that is better. At least now we know what we can expect to get from our current insurance company, and we are not pleased. So let me ask you then, what did you do? Had you ever have to use a car insurance? If so, please leave a comment and let us know.